Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 8th of January. Starting off with the FTSE 100, which is currently toying with that December resistance line, 82.50 the level. So far intraday we're above it, and we've got the RSI rebound at neutral 50 as well. So that does suggest that we've got double signal there in terms of at least heading back up to 8400. That's while there's no end of day close back below the 50 and 200 day lines currently around 8200. Worst case is we've got to test the floor of that rising 2023 price channel up at 8100 before trying to move higher again. But at the moment it looks as though we'll stay above that 8200 level, break 8250 and head up towards 8400. Moving on to the DAX, which if anything is in a better position at the moment than the FTSE. We've filled those two gaps to the downside that we had last month. Above the first gap there, 20,200, looking for the top of that rising trend channel from the end of 2023 as high as 20,900, really basically up to 21,000 by the end of this month. But ideally we stay above the first gap down that we had. Triple bounce for the RSI at neutral 50, so that has been a leading indicator on the upside move that we see at the moment. Worst case, if we do have a rug pull, would be back down to October resistance and the 50-day line currently around 19,600. Moving on to the Dow, which is not joining the party at the moment in terms of the indices that we look at here. We've got that rising trend channel, the floor of the channel there, 42,500. At least we're holding above that. Otherwise, there's a risk of a November support there, 41,700. What we really want to see here is a break of that still rising 50-day line and the top of the recent range, 43,400, to take us up to the top of the rising trend channel from back in April, as high as 45,600 by the end of next month. Moving on to the Bitcoin situation, where the rug has been pulled in the way that we probably didn't want. And here you can see that we had that brief push through the 100,000 level. Looked as though everything was fine and dandy, but rug pulled. We're now below the 50-day line there at 97,700. And while we are below that 50-day line, there's a risk of a move back to the uptrend line there from the middle of November at 93,000. Below 93, there's a risk of support on the way up at 85, but at the moment hoping that we'll stay on the right side of that uptrend line from back in November. Moving on to gold, which is in a better place than it has been for a while. We've managed to distance ourselves from the floor of that rising trend channel from February 2615. And while there is, with the end of day close above the 50-day line 2674, we could get up to retesting 2750, which has been post-November resistance for this market. But the missing ingredient here is an end of day close above that 50-day line. And we're $9 away, but we do have a bounce off RSI 50, which suggests that we should see that happen by the end of this week. Moving along to crude oil, which we haven't looked at for a while, but it actually has improved as we wanted it to. Rising trend channel base there from September. We're on the right side of that now, the top of the channel there, around $74 above that. New leg up potentially to $79, the upper parallel of that rising trend channel, and basically post-August resistance for this market. Ideally, we stay above recent support and former November resistance, 72.75 in the meantime. Moving on to another market we haven't looked at for a while, which is pound dollar. And here it looks as though there's been a bit of a shift. We've had a dead cross sell signal between the 50 and 200 day lines last month, 128.20. And we've also broken a red uptrend line that's been in place since October 2023. The line there currently running at 126.20, and below that, which we obviously are at the moment, there's a risk of a move down towards the $1.18 level, which is the floor of that falling trend channel from the end of 2020. So maybe on a couple of months view, $1.18 could be where we're heading while we're below that $1.26 area. Onto the stocks, and starting off with one of the less frequent flyers, which is Argentex. And here you can see that we are just breaking out of that falling wedge that we've been in, 32 3/4. Above that, looking for 39 pence, hopefully by the end of this month, after the bear trap rebound that we've had from below September support there at 28 pence. So it looks as though something positive happening there at the moment. Stock which I haven't looked at, I think, ever before is ASA International. Here we've got the run-up to a golden cross between the 50 and 200-day lines at 72 pence. Multiple gaps to the upside and downside, I suppose, previously, but turning around in a strong way. Rising trend channel there from November 23 in the top of the channel, heading for £1.23, hopefully as soon as the end of next month. Ideally, we stay above the latest gap there at 81 pence, ahead of a move to £1.20 plus. Another rarity is Diaceutics, and here just a decent rising trend channel there from the end of 2023, above the previous target, or the latest target there, £1.46, looking for it up to £1.74 by the end of next month. Ideally, we stay on the right side of previous resistance there at £1.35, so above 135 up to £1.75 there on Diaceutics. Stock which I've looked at quite a lot in the recent past is coming up next, and it is GenIP, and here you can see that GenIP has managed to break to the upside in the way we wanted it to. The previous target there, the top of that triangle there at 35 pence, above that, looking for a fresh leg to the upside as high as 50 pence. Hopefully that could be hit by the end of next month or even sooner, and ideally we stay on the right side of that 200-day line at 34 pence while we are doing it. Good to see a recent arrival on the stock market doing relatively well. Moving along to Jersey Oil and Gas, and here the shares hit the first target there, the top of that triangle there from October. That was at 69 pence, above that. Looking for a retest of post-August resistance just shy of the 200-day line at 92 pence, hopefully by the end of next month or much sooner, the way things are going, obviously. Looking for that to happen probably by the end of this month, and ideally we stay on the right side of 66 pence, the resistance on the way down back in November. Moving along to a stock which has been one of the best risers in the recent past, Kazera Global. Here you can see that we are toying with the top of that price channel there from June. The target there now up to 1.96 pence. Above that, the next leg up could be as high as 2.8 pence, maybe by the end of next month. Ideally, we stay on the right side of recent support, 1.6 pence ahead of a move towards 2.8 pence by the end of February. Decent news from Mkango today, and that means that we've hit our second target, around 10.6 pence. Above that, looking for a ultimate target there up to 14 pence by the end of this month, which would basically take the shares to 1 year plus highs over the near term. But 14 pence valid, especially while we're on the right side of 10 pence over the near term. N4 Pharma has historically had spikes which are then sold into, but let's see if this one, I think after the directorate change announced today, whether this one will have legs. Top of the channel there, the rising trend channel base from June at 0.81. Looking for that by the end of this month, while we remain above the 200-day moving average at 0.6 pence. Moving on to ProCook, and here progress has been decent in the recent past. Bit of consolidation there, but gap higher today, and looking for that resistance line projection there from the end of 2023 up to 51 pence by the end of this month. Ideally, we stay above the latest gap there at 36 pence while we make our move towards 50 pence plus. Next up is Physiomics, which has been a difficult customer in the recent past, but looks as though it is in a rising trend channel base. The top of that channel there at 1.05, looking for that by the end of this month. That would also fill the gap area up towards 1.2 pence as a best case scenario target, if we can clear the 200-day line at 0.9 pence relatively quickly. On to Rockfire, which has had its placings and various other news in the recent past, but we've got an obvious triangle there, converging triangle. We want to see the shares break 0.18. If they can do that, there could be another flip towards the 0.3 pence area at the top of the overall triangle there from the end of 2023. And you can see the stop loss there basically at 0.16. Maybe one would have it a little bit lower than that, because that would be below the recent range, but above 0.15, 0.16 looks as though we could have a break to the upside. One of the best performers on Aquis at the moment, and also from basically since the autumn, has been Sulnox, and here you can see that the shares have overshot our first target there, the big target at 81 pence. Above that now, looking for the upper parallel of that rising trend channel from the end of 23 as high as £1.16, and hopefully we can see that by the end of next month. The good point here, I suppose, is the way that we basically had a new support coming in well either at or above old resistance, and that step progression, a very strong one indeed. Only really back below 70 pence now, questioning the ongoing move towards the £1.20 zone. On to the last two. The first one, a company that knows, or said it knew of no reason why the shares are going up. I suppose more buyers than sellers would be the obvious thing to say, but we hit all our targets from below 0.5, so a revision of the situation today. Shares arguably in a rising trend channel from September, top of the channel they're heading from 6 pence. And we could still get that while we're above the 4 pence level, which is just below today's support for the shares. But all the other targets that we had from below 0.5 hit very well. Moving on to Team Internet, and here you can see that we've closed that gap, and ended day close above the top of that gap there at £1.18, and we could be looking at a follow-through move up to as high as £1.50 by the end of next month. But the key is holding above and closing above the top of that gap now. Finishing off with Totally, which has bounced off the floor of that rising trend channel there from November 23, and top of the channel there at 13 pence, looking for that by the end of next month, while we remain above recent support at 7.25 pence. That's it from me today. More updates tomorrow.